If you invested $20,000 in Tesla's IPO, right now your investment would be worth over $1 million. That's right, you'll be a millionaire with just $20,000 invested. That's a whopping 6,000% return in just a span of 10 years. This incredible performance outperforms almost every CNBC's favorite stock in the market. It even changed the mind of this guy.
See, Tesla's an electric vehicle maker, and I think this space is all sizzle without any stage. Sell. You get shares in the IPO, you want to sell them after the initial pop. Do not hold them for longer than that. I want you out the first day. That's why I've been taking a stand with Tesla. If you're going to invest in a battleground stock, Tesla's got all the ingredients of a winner.
Recently, Tesla has been called a future trillion-dollar company. Billionaire investor Ron Barron, who correctly predicted Tesla shares to hit $1,000 by 2020, said by the end of the decade, he expects Tesla to become a trillion-dollar company. And with $5,395 per share, Tesla would finally hit the trillion-dollar market cap, joining the likes of Apple, Amazon, and Microsoft. But it will also mean it's larger than Ford, Volkswagen, and GM combined. So here's the question. How can anyone possibly justify a company that makes less than 500,000 cars per year to be valued more than a group of companies that delivers more than 30 million cars annually? But before we talk about the trillion-dollar valuation, we need to dig a little deeper into Tesla's business model and its mission. In 2006, Elon Musk wrote in his Tesla blog, "So in short, the master plan is to build a sports car, use that money to build an affordable car, use that money to build an even affordable car. While doing above, also provide zero-emission electric power generation option." This plan would become the backbone for Tesla as a company. In 2008, Tesla came up with a sports car, the Tesla Roadster. The Roadster was the first highway legal electric car to use lithium-ion battery cells, and also the first production car to be launched into space. Next, they made the Model S, a full-size sedan, and Model X, a luxury SUV. Using that money, Tesla built a much affordable car, the Model 3 and the Model Y. While doing all above, they built giant gigafactories, mass-producing batteries, bringing the price down dramatically. And don't forget, building a charging network all around North America and Europe. In 2019, Tesla sold more cars in 1 year than the previous 2 years combined, and was projected to deliver 500,000 cars in 2020. The consistent growth from the company is just staggering. Revenue from the last 10 years grew from 15 million in 2008 to over 25 billion in the last calendar year. Now that's a staggering 107% compounded growth year after year. Things get even more interesting when you look at the EV market. In US, Tesla owns almost 60% of the EV market. The latest Model 3 is by far the most popular EV car in the world. In fact, 14% of the world's entire EV sales in 2019 were Model 3. At this point, you probably heard about the Tesla killers. When any new electric vehicle comes out, critics are always quick to point it out as Tesla killers. But in reality, Tesla killers have failed miserably. Whether it be Fisker, which sold 2,450 cars since it was launched in 2011. After some battery issues with the plug-in sports car, it recalled most of its car back. Faraday Future unveiled its EV car in 2017, a luxury vehicle planned to go into production in late 2018. Later they just burned through billions of dollars, laid off workers, and till date they haven't produced a single car. Let's put it this way, Tesla has more EVs in space than Faraday Futures and Nikola combined on road. Most Wall Street analysts predicted Tesla market share would slowly drop as years went on. This might be right in years to come, but so far Tesla has only gained market share in a growing EV market. Next, they have the gigantic supercharging network. Tesla created its own network of charging stations all around Europe and North America. Drivers can fully charge their cars in less than an hour. This gives an incredible customer experience you just don't get with any other EV automakers. This is where we stand right now. A rapidly growing company, profitable in recent quarters, has its own charging network and a CEO you just can't bet against. But how can anyone possibly justify a $1 trillion market cap? For starters, to get to $1 trillion market cap, Tesla has to tick all, if not most, of the following things: sell 6 to 7 million cars per year, lower its cost per car, increasing its margin, build factories much more efficiently, get autonomous driving working, and most importantly, hit that like button to support and help the channel grow. Tesla is projected to sell 500,000 cars this year. Now that's a far cry from 67 million, but Elon Musk believes he can do 1 million cars within the next 2 years and grow 50% year over year. To get to 6 to 7 million, the company has to ramp up production of Model 3 and Model Y massively and potentially release an even affordable car in the future. There's about 90 million cars sold per year around the world. Going into 2021 and beyond, as more and more people transition from gasoline cars to electric cars, even if Tesla's market share in the EV business falls to 10%, it will still equal to millions of cars produced. Right now, Tesla has a huge advantage of being years ahead in battery technology, and specifically factories designed to manufacture electric vehicles. While other companies are still invested in internal combustion engine plants, Tesla has rapidly built huge factories ready to meet its demand on time. The next production vehicle, the Model Y, is projected to push Tesla's annual vehicle delivery near 2 million. When you add Cybertruck projection onto the model, you will comfortably reach over 2 million in sale. But we're still far away from 6 to 7 million. This is where many believe Tesla will produce a much affordable car, a 25,000 Tesla Model 2, designed and manufactured in China. Since the opening of Shanghai Gigafactory in late 2019, Tesla has a job posting for a car designer in China. Now if this is true, we could soon have a car designed and manufactured in China to reach the mass market in Asia. If they end up selling 7 million cars per year at an average selling price of $36,000, Tesla would gross $256 billion in revenue. Next, we need to talk about bringing the cost down. There's no point selling 6 million cars if your margins are horrible. One of the best tactical moves Tesla has done in the last year is to build a gigafactory in Shanghai, China. A recent Chinese research paper shows the gross margin for a Model 3 made in China is high as 35%. Compare that to a US-made Model 3 at only 20%. Last week, construction work at Tesla Gigafactory Shanghai seems to be back at full speed. The vice president of Tesla China said Tesla would ramp up Model 3 production by more than 30% within the next month and start Model Y production at site by Q1 2021. We have already seen battery technology get better year after year. The 2012 Tesla Model S made around 265 miles on an 85 kilowatt battery pack. Compare that to a 2019 Tesla Model 3 that could go up to 322 miles on a much smaller 72.5 kilowatt battery pack. Last year, Elon Musk told investors, "We gotta scale battery production to crazy levels that people cannot fathom today." A combination of improving battery prices and production overseas in China will improve the gross margin dramatically. The last 2 quarters, Tesla achieved an operational margin of 4 to 5%. By the end of the decade, it's very likely they would end up over 10% comfortably. We're not done yet. Tesla has more plans. In 2019, Elon Musk revealed an autonomous ride-sharing app. He said it will have similar business model to Uber or Lyft and will have over 1 million robo-taxis on road. Tesla would take 25% to 30% of the revenue, and the car owners can earn while the car is not in use. Musk also said you should be able to enable your car to make money while you're not using it. Because of autonomous driving, Tesla could easily decrease the cost per ride, making it impossible for Uber or Lyft to compete with. ARK Invest projects Tesla will make $351 billion in robo-taxi. This might sound a little too good to be true, so let's say worst case scenario, they do 10% of the projection. That's still $35 billion in revenue. We still haven't talked about SolarCity or the service business. Best case scenario, Tesla could gross anywhere between 350 to 450 billion in revenue by the end of the decade. Ron Barron recently said Tesla has a potential to hit at least 1 trillion in revenue in the next 10 years. Last 2 quarters, Tesla had 4.8% operation margin. Now, like I said before, the company could do at least 10% operation margin comfortably. That would bring the estimated gross profit to around 35 to 45 billion by the end of the decade. And in Ron Barron's case, Tesla could reach up to 100 billion in gross profit. This is just the start. In a perfect scenario, Tesla could deliver 10 million cars, have a robust robotaxi fleet, lower Tesla's cost, increasing the margin. This is what ARK Invest describes as a golden goose scenario. We would be looking at a company that's worth multiple trillions. About a decade ago, when Amazon had a market cap of Tesla's today, short sellers on Amazon could only see the company as an online bookseller. Today, they see Tesla as just a car company. In time, they'll realize Tesla is not just a car company.